Okay, so we'll keep our eye out on this one, GPT Infra Projects. But let's get another guest into our conversation as well. Siddarth Bhamre of Angel Broking is also with us. Siddarth, so far, if you had taken short positions, you would have made money in this market. But what's the strategy as we head into trade today?
Good morning, Sonia. Yesterday, the bounce back in market was mainly because what I term as emotional buying before this Diwali season. Because a lot of calls we received yesterday that instead of gold or silver, they prefer to buy some stocks, and that's what the retail sentiment is at this point of time, where people are having more confidence in market, but markets are not going anywhere. On the other hand, and obviously this data gets reflected in DIs, because DIs is nothing but mutual funds and insurance, and the main source of money to these guys is again retail HNI. FIs on the other hand, as Anuj has been pointing out, that they have been sellers. What we are seeing now is formation of fresh short positions. Yesterday IVs declined. Whether event is in your favor or it is not in your favor, post event IVs do decline. So yesterday I was listening to talks that because IVs have declined, hence this is an indication that 7800 support is in place. I think that is not a very correct assessment. IVs may again tend to rise from current levels. We will see that DI's money would again now start chasing. Everybody knows that the parameters which we were looking for, be it earnings or BR election, have not turned in favor of market. But DIs are getting money and they would start putting this money now again into defensive, and your high beta names and infrastructure banking names, these stocks would keep correcting. So I believe we are moving towards 7800 support. It's a no-brainer now. It is quite possible, looking at the options data, where the put options unwinding has happened and call writing has taken place in at the money strikes of 7,900, slightly out of money like 8,000, that support may also get breached. Only positive part which I see is that historically we have seen that whenever put call ratio comes to 0.7 levels, you have seen good bounce in market, and you still have long way to go for expiry. Though holidays are there, your put call ratio is already 0.77, 0.75. So should we say that we are immediately rushing towards 7,500 if 7,800 breaches? Maybe not. So I would say that be selective. Yes, this market is correcting, but don't go all guns short in this market right now. You would get probably some look at the global markets in last 1 week, 2 weeks when we have underperformed, global markets have done really well. So it is quite possible that even we might get some bounce, and this is sell on rise market. But if those who are expecting that bottom is in place and bull run is about to start and next 1 year is going to be great, I think they should wait for next 3-4 months to see how market pans out.
Okay, so that practically nobody told us that. All our experts whom we've been interviewing for Diwali have been saying that there is a little bit of near-term pain left, but the story is largely seen as positive over the next 3 years. That's based on an economic recovery. But anyway, coming back to the trading strategies for the day, Shubham, is there a short trade in the bank Nifty that's a little more clear than the Nifty itself?
Yeah, if you look at the movement in banking, from a medium-term perspective, I would believe yes, there is a good possibility of going ahead and taking a short trade in some of the banking names. But if you look at the short-term chart, then 16,500 seems to be a very important support where the Bank Nifty is already retested, and there could be a temporary bounce back which might happen. And yesterday also we did see that most of the banking name were refusing to correct. So I think we should wait for this trade to actually go and initiate, and if at all we see a bounce towards 17,500, then I would believe that that would be an ideal level to go and take a short trade on the Bank Nifty, where we would expect that again a slide can happen to the level of 15,800 to 16,000, which is like a more medium term kind of a level where we have seen a swing low happening. So the call remains a sell on pullback, not at this level, because the reward to risk is again not favorable there. So 17,500 would be an ideal level to go and take a short trade there.
Okay, gentlemen, just hold your breath. We'll come back in just a bit. We will also get some more trading strategies from our experts in our segment Super 6.
The first stock today is buy on Petronet LNG. This stock has continued to form higher highs and higher lows, and moved higher steeply even when Nifty was in doldrums. The momentum is strong, and so this short-term trend remains positive, and which should continue over next few days. Petronet LNG can be bought at current market price with a stop loss of 199 on downside, and the target can be expected at 230 on upside.
I have a buy call on Apollo Tyres. Apollo Tyres has reflected near-term strength by giving a high volume upward key reversal on the daily chart. Mechanical indicators on the intraday chart have turned positive, have signaled a buy, indicating the stock's intention to appreciate further from here. One can buy Apollo Tyres at its closing of around 160, the stop loss of 158, and the target of 164.
One would be buying on NIT Technologies. This stock has given a price volume breakout yesterday, so I'm expecting a rally in this stock, although it didn't sustain above 600 mark yesterday. But if it manages to hold above 600 levels for some time, I'm expecting a target of 624 to 630 for a minimum today itself. Maintain a stop loss below 580 for the trading.
The next stock is Adani Port, which is a sell recommendation from us. This stock has continuously moved lower and has failed to take out even the 20 days exponential moving average on upside. So as long as it fails to take out that average, one should stay short in this stock, and any pullback is going to be only temporary. So one can sell Adani Port with a stop loss of 290 on upside, and the target can be expected at 256 on downside.
I have a buy call on Bata. Bata has reflected near-term strength by giving an upward bar reversal on the daily chart. The mechanical indicators on the intraday charts have signaled a buy from an oversold situation, indicating the stock's intention to appreciate further from here. One can buy Bata at its closing of around 483, the stop loss of 478, and the target of 493.
Second, there would be a sell call from my side. That would be a sell call on BOI. Expecting a target of 128 to 126 today itself. Maintain a stop loss above 135.50.
Welcome back. It's just a few seconds to the pre-opening rate, so I will not ask questions of our guests. That's the SGX Nifty opening, indicating that the open could be a tad below that 7,900 mark, 7,877. Not a whole lot. We have seen a 100-point lower down tick yesterday, so this isn't too heartbreaking. One should expect definitely reverses in the rupee because the dollar index is now almost at 100, so you should expect something worse than that. I think 66.40 that the rupee closed at yesterday, or around those levels. Just waiting by for the opening tick on the markets. Okay, it's still wavered. Trying to celebrate Diwali, as it were, the Nifty refusing to go down in early morning tick, and you can see our producers also reminding you that it's a Diwali opening. The first tick was green, but now perhaps reality prevails. Still very, very choppy for the Sensex and the Nifty, flat as you can see. Let's wait for them to settle down and let the Diwali hues go away. The rupee is opened only a tad weaker, 66.43, so not much. It's more or less a flat opening for the currency as well. Now the Sensex and the Nifty showing green ticks, but I guess we'll wait by.
Yes.
Well, let's get you our own way of celebrating Diwali. Our head of research, Varinder Bansal, has been doing that throughout this results season, getting you those innocuous numbers which you might miss, and therefore this earnings pataka from him today. What do you have, Varinder, for us?
Well, Jamna Auto, very, very good set of numbers coming by the company. It's the largest manufacturer of tapered leaf and parabolic springs for commercial vehicles in India, and it's the third largest in the world. So not a small company by any chance in terms of their pedigree. Look at the numbers for Q2. Consolidated net profit was up 380% for the company. Total income, one of the most important thing which I'm watching this, earnings season, the consolidated total income was up 24% for the company. and consolidated EBITDA was up 134%. Margins came at 11.3% compared to 6%, so nearly doubling of margins for the company. In the first half itself, the company has done very well. The consolidated first half profit stands at 28 crores compared to 8.5 crores, and in FY15 only the company made a profit of 29 crores. So they've already done what they've done in the last full year itself in the first half. So if you have to watch out in terms of earning multiple, the stock is trading around 15 times FY16 earnings, so not really an expensive stock. It's a zero net debt company. In the annual report, after a long time I read management comments where they say that they have a in-house system which is known as Lakshya, where they're concentrating on ROCE. The ROCE for FY15 was at 22% compared to 12% in FY14. So they've improved their ROCE by nearly 10% in the last 1 year, and they aim to have net block equal to its net worth in the next 2 years. So clearly, very strong set of numbers.
Oh yes, and I've watched this company as well. It supplies to over 25 countries, and some of the biggest names it supplies to, whether it's Volvo, whether it's Suzuki, all of the global companies Jamna Auto does supply to.
There is 7% higher, but actually we've got some Pataka gifts coming to you, even from Mr. Tulsian. What is your pick of the earnings pack, Mr. Tulsian?
Lata, two stocks. One is Graver and Vale, and second is Walchand Nagar Industries. Because if you come on the Graver and Vale, they are the leader in electroplating chemicals. They have 5 plants. But apart from that, they are owning Grovel 101, which is a shopping mall, about 6 to 7 lakh square feet already operational. Plus, they are adding another capacity of 5 lakhs. But strictly going by the results, the operating profit has shown a 50% jump. I am giving QOQ, and PAT has doubled from 7 crore to 14 crore on a top line of closer to about 100 crore. So it's not again a small company, 500 crore top line and PAT of about 14 crore on a 7 crore is going to enthuse the market very much. It's a 1 rupee stock, and I think ruling at around 24-25 rupees. And second is a Walchand Nagar Industries. It's a very interesting stock. They are into defense, aerospace, nuclear, railway, all high critical engineering products. And the best part is that the company had an operating loss of about 7 crore in the Q1. As against that, they have shown operating profit of 14 crore. That means minus 7 crore has turned into 14 crore. I am referring on a sequential basis, with a top line not increasing so much from 118 crore to 138 crore. And consequently, because of the operating profit was at negative in Q1, obviously there was a net loss as well of 21 crore. That has turned into profit of 2.4 crore. And again, the core business, that is heavy engineering EBIT, has improved substantially to 14 crore. So that is going to get liked by the market, and I won't be surprised to see both the shares showing double-digit growth today. Yeah.
Okay, so those are two stocks that will be reacting to what is a really good set of numbers. Those are stars identified by Mr. Tulsian. But let's get back to some trading ideas as well. Siddarth, you have a couple of strategies that you've identified for us from the mid-cap space. Take us through them.
So these are more than mid-cap, means large cap kind of stocks, where HUL, as I was mentioning, Sonia, earlier, that the retail HNIs don't have any other avenue to deploy their money, be it gold, real estate or FDs, and returns are not attractive, and that money is flowing into market. So DIs will have problem of plenty, but at the same time, these fund managers are also cautious about markets, but they need to deploy their money, and this money is going to flow into defensive sector, and that's the reason both the stocks which I have identified today from a trading perspective though are from defensive sector. Case in point, HUL, we have seen that last expiry stock underperformed badly, and there were a lot of short positions. Most of the short positions are not rolled over, and stock is consolidating in a range of 790 on the lower side, 805, 810 on the higher side. It is quite possible that the stock can move above this zone, and hence I am suggesting to buy HUL with target somewhere around 852, and you can fix stop loss around 780 odd levels. The other stock is from pharma space. Those stocks like Dr. Reddy and Sun Pharma are giving nightmares to people who have gone long. But there are stocks which are not doing so bad, like Lupin and Glenmark, which are consolidating near support levels. So Glenmark has good support at current levels. here again too, we have seen that it has blend of long and short. There were some longs which got created around 1000 plus levels, which are still there in system, and stock is not correcting significantly. So even this is a stock where I would suggest to trade with positive bias, and there would be traders who want to have exposure in pharma sector may move out from Dr. Reddy's, Sun Pharma, and shift to stocks like Lupin, Glenmark, to name few.
Okay, there are some signs of the market now stabilizing. Even now there are some divergent numbers coming in on Sensex and Nifty, but the Nifty looks like it will open only with a 0.5% cut. 7878 is where it looks like it will settle down. But there are the individual super performers. NHPC for one, 3% higher. Actually, on that note, Prakash, the entire bunch of numbers, not just the ones that came yesterday, though we have been seeing a flood of smaller numbers in the last few days. Anything that stood out for you?
From the larger numbers, I think the best that I like was Tata Motors, and in spite of whatever happened to it in the quarter, the way it's kind of bounced back, we have a fairly high conviction call that Tata Motors should probably breach those 450 levels soon. And what we see apart from numbers, there's a vacillation towards large cap stocks which are getting to be more resilient. Look at Reliance. The behavior, particularly this series, has been so outstanding. And I think it's just the beginning of a very strong run-up that it could see towards the end of this series. I'm talking about particularly this series, the build-up on the option side as well. But from the numbers that came through, yes, NHPC was a relief. After a long time, you have some very encouraging signs, and the management body language was also quite aggressive and positive for a change. But one of the numbers that stood out, the way we're talking about, these was a small company called Vindhya Telelinks. It's not very small, but they also had a 3.5-4 times of EBITDA growth. And then these are companies which are quietly restructuring themselves with interest burdens coming down, gradually deleveraging balance sheet. So I think it's what Ashok Leyland did last year. I would believe about 7, 8, 9, 10 companies could do this in the next couple of quarters. So by the time we come to March, you'll have a whole set of new names which could get re-rated from that perspective.
And Vindhya Telelinks is one of them.
Yes, I mean it's been doing very well, but now of course this with the support of lower debt burdens, it could kind of go places.
But what catches my eye this morning? There's one stock, I don't know, Prakash, if you ever heard of it, GPT Infra. You know what it's quoting at? 21% higher.
So
I'm just saying
it's a re-rating that will happen for most of these stocks. Interest costs coming down. We've always been obsessed with JP Associates and Lanco and the GVR, but where it has been hurting and it can change is companies where the only thing that was stopping them from growing was interest costs. Everything else is in place. So you have all the other boxes check mark, but is the
money flowing in and probably rates falling.
And 8.5 trillion rupees being spent on railways modernization, and these are companies that specialize in that. So it's kind of their time glory days have come, and they don't last too long. Those 3-5 years is what you'll have to see these companies do very well, and then probably they
so
could
16% on GPT and 6% on Shalimar Paints are topping the list.
Okay, well, a couple of other stocks, companies that have done well this quarter, apart from NHPC, but the numbers are quite good. Eros had a really good quarter as well. The profits for Eros went up 80% to 90 odd crores. So that stock in pre-opening is up 3 odd percent. Man Industries, it was a good quarter for that company too, Man Industries. So that stock too in pre-opening has moved up higher. It should be up for you on your screen. And what was a disaster this time was Bank of India, clearly. Net loss of 1126 odd crores. So that stock is deep in the red this morning, down about 4.5 odd percent. But Mr. Tulsian, one more stock that you've picked out for the longer term investor is Vimta Labs. What's the story there?
See, Sonia, this is a contract research, third-party contract research and lab testing. And if you see the infrastructure of the company, they have excellent infrastructure. Maybe out of about 650 people, 450 are scientists employed. And they have 3 lakh square feet of lab, world-class lab facility. And if you really see the problem, the company has faced this poor performance in FY15. Just to give you quickly, in FY15, EBITDA fell to 18 crore rupees from 29 crores. And similarly, PAT fell to 5 crore rupees from from 13 crore. What has happened, in fact, in this last 1 year, all the pharma companies have started, carrying out the contract research in-house, and we are seeing the result of that. US FDA warning letters coming in, and the company is also now setting up the food testing laboratory. We all know again the Maggi noodle issues and all that. So probably this is an eye-opener that all pharma companies will start now outsourcing the reliable and world-class lab facilities which can give them independent testing and all that of contract research, food testing laboratories and all that. And I'm seeing that, because of course with every increase in top line they will be having the advantage of operating leverages. As I said, 3 lakh square feet of lab and 450 of scientists. So obviously the major chunk goes into the salary and administrative expenses. But Q2 has shown a very remarkable performance. 34 crore income. Operating profit has almost more than doubled from 1.7 crore sequentially. I'm talking. I'm not referring YOY. Rose to 3.7 crore, and operating profit margin has moved from 6% to 11%. And mind it that this is the beginning, had not yet started. And in fact, I see that probably FY14 could get surpassed in FY17. So PAT of about maybe 2.5 crore, which has almost doubled, and resulting into an EPS of about maybe closer to 1 rupee plus only of quarter, which was at 2 rupees for whole of FY15. So I'm seeing a dramatic turnaround to happen in this company, maybe for FY17. But still, going by the next 6 months, I'm taking a target of 120 on the stock.
All right. That's another gem from Mr. Tulsian, a longer term pick for you. Well, let me get back to you, Shubham. Two stocks where people would be stuck with positions: Motherson Sumi, where you could be stuck with short positions, and Dr. Reddy's, where you could be stuck with long positions. What are the charts saying for this contract?
Yeah, on Motherson Sumi, very clearly, we can see that the pullback is already there in action. However, the longer term trend might still remain negative, but this movement is very, very sharp for a short trader to continue holding the position. So I think this pullback can extend to the level of 310, and that is why if someone is already short, they should liquidate the position and look to recreate once the stock comes around that. Whereas on the other side, if you look at Dr. Reddy, I think the fall was very sudden after the consolidation. But if you look at the medium term support, I think 3290 to 3300, so roughly this area is a very important support for the script, where immediately we don't see a breakdown happening below that. So I think if someone is already holding on to that, there is definitely some more downside that can happen. But I think 3300 also, once that is retested, then we will again see a pullback happening there. So maybe one can liquidate the positions and recreate once the stock retests about 3300, and that would be an ideal level to enter the script.
All right, just a minute more for the markets to open. Let me thank Mr. Tulsian and Prakash for giving us your Diwali gifts and observations. That's for our viewers. The markets look like will open with a 0.5% downtick, and it's very few stocks actually that are holding on in the green. Tata Power, incidentally, you should point out, after reporting a loss in the previous quarter, clearly at this point in time, it's a little better for Tata Power. Tata Power is the stock I'm talking about. Tata Power is opening with a little bit of green, and among the other handful of stocks that are in the green are a couple of other Tata stocks. TCS is a bit in the green, Maruti Suzuki, Wipro and Kane. That's all that is in the green. Otherwise, the Nifty is looking like it's a dreary opening this Diwali, but it's not a great deal of loss. The biggest loss is for Hindalco, and that Nigel had already alerted you. The Novelis numbers are bad, Hindalco numbers expected today. So that's the only stock which is showing a big cut. Next to that, of course, is Bank of Baroda, which is showing a 1.2% cut, but that's true of several banking stocks. So let's see how the markets opening with a 1.2%, markets opening with a 0.4% downtick, 0.5% actually, and that's 37 points, 38 points down. Not very different from the pre-opening rates. It's, I guess, 45 out of 50 as far as the number of red stocks are concerned. Okay, now there are about 8 stocks that are in the green, but very, very marginally. So it's easier to read the green stocks, as I told you. Tata Power, Maruti, ITC, Ultratech, NTPC and Adani Ports are among the few Nifty stocks that are in the green. Okay, HUL also in that list for good measure, but big red ticks coming in on ONGC with the crash in crude prices. Hindalco, that's down about 2.4, that's the Novelis impact, and basically commodity is not doing too well. So Vedanta as well down 1.3. Among the other big losers, Infosys down 1.2, Bharti Airtel down 1%, M&M down about 0.8, IndusInd down 0.8. Well, that's it actually. It's an uneventful Nifty performance, but for Hindalco, I don't think we have to worry much about any of the Nifty stocks, but there's plenty to bother about in the mid-cap space. Sonia?
Well, it's an uninspiring and lackluster opening really, so flat with a bit of a negative bias. The market breadth is also even Steven, slightly in favor of the declines, so not too much happening in trade today. In terms of individual numbers, the NHPC is up 4% on the back of a good set of numbers, but that stock is an 18 rupee stock, so you know, it looks like it's a big move on the upside, but the base is very small. Eros International had a good set of numbers as well, so that stock is up higher in the green. You have Prestige Estates that's up about 1%. The RBI has said that FIIs can now invest up to 49% in Prestige Estates, so the limit has gone up, and that's the reason the stock is up and about. Man Industries had a good set of numbers as well. That stock is higher in the green. And a couple of result reactions on the downside. You have Bank of India where there was a big loss, Jain Irrigation where the losses have widened and the operational performance is also weak. Central Bank of India, the asset quality is stable this time around, so there hasn't been worsening, but then it's still, you know, elevated at asset quality. In terms of asset quality woes, so Central Bank of India is down about 0.7%. The Indigo IPO will be listing today, so you have a lot of the aviation stocks that are spiking up in excitement. So there's Jet Airways that's in the green, 2.5% higher there. There's SpiceJet that was up almost 7% yesterday. It's up another 3% today. So that's a stock to look at as well. And from our earnings Pataha corner, there was Jamna Auto, which had a very good set of numbers, and that stock should be up for you in a bit. And Jamna Auto up almost about 8% right now, reacting to a good set of numbers. On the downside, as I was telling you, you have a couple of these stocks like Bank of India that are reacting to their numbers. Apart from that, Orchid Chemicals is down almost about 2.5%. Jain Irrigation, Madison Sumi has come in for some profit taking today, but largely unimpressive performance.
Yes, Bank of India actually is in the green, and my sense is that the market is placing the same interpretation that Anuj also pointed out. First of all, it's a dividend yield. And secondly, my sense is that there's kitchen sinking by entry of a good management. I mean, if you can bet on people, and in banking you would, they can make a big difference. Obviously, you cannot turn around too much by way of exposures, but you can make good from whatever rotten assets you have inherited. So Bank of India actually finding its feet at this point in time, more particularly because it's a dividend stock as well. And PTC India Financial, probably you left that out. That's taken a big beating. It's a young stock actually. It's just about 4 or 5 years old. When was it listed? 2011 if I'm not mistaken. And since these years, since it did not have any legacy assets, it was not showing the pain of the power sector. But this time straight away 200 crore more of bad loans, and that pain is seen in the stock, 8% lower. PTC India Financial. But Anuj, your thoughts? It's not a big loss actually for the amount of bad news that the market had to take by way of FII selling and global Qs.
Yeah, it's not a bad start at all actually from the internals point of view and from the data point of view. In fact, the mid cap index is already in the green, Lata, and you know the sense you get is even yesterday the mid cap index ended in the green. The sense you get is that this could be the phase where mid caps outperform a bit, but you know maybe we speak too soon. Sometimes you know on days like this the start is not as weak. This a second round of selling comes and takes market lower, so that's something to watch out for. As I said in the morning as well, for me the base still remains that 7771. If you go below that, then there's chance of revisiting previous lows. For today, better to stick with individual stocks and with trailing stop losses. No aggressive Nifty trades.
No, your point on the mid caps, I just wanted to elaborate a bit. Over the past 48 hours, we have been speaking to a lot of very prominent people on their observations on how the markets will trend. You know, Ramdev Agarwal, Manish Chokhani, Madhusudan Kela, Rakesh Jhunjhunwala, Shankar Sharma. We've spoken to a whole lot of people, and one of the things that seems to come out from many of these experts is that you know, growth is going to happen outside the Nifty. There is growth, but most of the Nifty companies are kind of, you know, in either saturated growth areas or not even in growth areas. But as you said, mid caps is where you know, there could be a longer term sprouting of opportunities. So mid-caps outperformance is what many of them did refer
even
to.
Saurabh said that yesterday, that don't expect Nifty earnings pickup, but individual companies, it's a lot to choose from there.
So you have to be. This is a stock pickers market. Yeah. This is no longer just buying the Nifty or selling the Nifty kind of market. It is going to be a stock pickers market, and therefore the advice from Madhusudan Kela repeatedly was. And for that matter, Ramdev Agarwal and Manish was, trust the fund managers. I mean, you cannot look at 6,000 stocks and pick your best. The fund manager is paid to do that for 1% fee. That's what you will get. So this is really the message that came very strongly from all the experts, that this is going to be a strong mid-cap market and a stock pickers market.
All right, just a couple of more stocks that are reacting to their numbers. You have Coffee Day, where the numbers were looking good this time around. So that one is up almost about 2% now, 2.5%. And Balkrishna Industries, where the margins have improved quite a bit for the company, but the revenues have actually fallen. So Balkrishna Industries is still higher, reacting to a good set of operational performance. Overall for the market, the Nifty and the Sensex are down 0.5%, but the mid caps are trading in the green at this point. So let's do one thing. Let's do a quick recap of Shubham Agarwal's stocks for today. He has 2 buy calls and 2 sell calls. So let's start with the buys first. He recommends BPCL with a target of 960 and a stop loss at 875. He also recommends TVS Motor with a target of 315 and a stop loss of 274. He also shorts BHEL with a target of 160 and a stop loss of 196, and PFC with a target of 200 and a stop loss at 238.
And here's a quick recap of Siddarth Bhamre stocks as well. He has 2 buy calls. First is one on HUL. He has a target of 852 and a stop loss at 779 on that stock. And the other buy is on Glenmark Pharma. He has a target of 1035 rupees and a stop loss at 924 on Glenmark. And with that, let's welcome the market master for the morning, our Diwali guest, Shankar Sharma of First Global joins us now.